What's up, guys? I'm going to start this video by breaking down a high quality trade setup on the 5-minute time frame. So let's start by looking at this section of the chart down here. Now initially, as you can see, we have the market in a downtrend, but then we get a sell rate forming, which marks the beginning of an uptrend. The market then moves through a stair-stepping pattern before actually making a sharp breakout above the 530 level. Now, notice how this 140 plus point spike here pushes the market to new session highs around the 680 level. Now, I'm sure that here a lot of traders might have thought that this spike was caused by a sudden surge in buying, but in reality, it was clear market manipulation since the market makers were simply here trying to grab liquidity. Now, as we all know, what basically rises will eventually fall, and what declines will rise again. The real question here is, how do you actually know when to enter the trade? In my opinion, when it comes to addressing this critical question in your trading, it's important to trade a reflective approach as you look, without rushing at the bigger picture. And what that means is that you must be methodical and granular in your analysis. Sure, entering here after this initial breakout at 450 or even at the 530 level could have been profitable. But at the same time here, relying on a breakout hint alone without actually considering other factors could leave you in a bad position if it turned out that this breakout was actually a fake move. Now, to be honest, for me, one technical signal without solid structure or confluence is not the best way to trade. Now, in this particular setup here, the market makers targeted an imbalance zone visible only on the 12-hour time frame, and it actually took me some time here to identify this clue, but at the end of the day, it paid off nicely. That's why a bit earlier I emphasized that the importance of being methodical is crucial in your analysis. At the same time, here again, you shouldn't rush or force your trades. So this 12-hour imbalance zone coincidentally marked the peak of the entire uptrend. I'd also like to point out here that this 140-point surge might seem like a genuine market move to an untrained eye. However, the spike was, in my view, driven primarily by the significant concentration of stop orders found, obviously, in a 12-hour imbalance area. In other words, guys, what appeared as a strong market move was, in essence, a manipulation aimed at liquidity grabbing rather than a reflection of the market's true direction. Also here, look at the divergence angle with price and volume profile clearly moving in opposite direction. I mean, it was a no-brainer really to sort of figure out the direction the market was going. That's why when you consider the confluence of things here, I didn't short during the surge. Instead, I waited for the price to show a clear downward move after the imbalance sprint, followed by a break of structure below the 640 level. And now, as you can see, this also aligns with a bullish order block. Once price retraced into this imbalance zone, that's when I took my short position. Regarding my targets, I set my first within the range of the 574 imbalance zone. Then I covered my second target just above the 530 level. Alright, that wraps up this trade, and now let's move on to the second one. So this setup begins with a break in market structure around the 655 level on the 50-second time frame. Now, after spotting that, I shifted to several higher time frames to gain a clearer perspective, eventually finding the 5-minute chart, which gave me the broader context I needed. Initially, as you can see, the market makes a strong move upward. However, it quickly sells off, pushing both times right through this imbalance area and taking out the recent low down here. Now, following this, we see a 30-point manipulation leg to the upside, which is then met by a series of supply bars. What's important here is that the bounce that occurs next, as it validates at the bottom of our range, it's really, in my view, critical. Why? Because we then witness a break of structure above the 580 level, which signals a potential reversal. After that, the market pulls back, doing a quick retest of the flip zone before actually running higher as it rebalances the left side of the chart. This, in my view, marks a depletion in bullish sentiment as the rebalancing move gets completed. Now, obviously, we had a promising setup here that could have been a good reason to consider a long entry. But the reason I held off is because, for me, structure is a key factor when analyzing setups. Now, don't get me wrong here. I mean, there is structure here, but it's just more of a ranging and stair-stepping type of structure. Compare that to what we see on the left side, where the structure presents more opportunity. In fact, the moment the range established its bottom, my main goal was to pinpoint a short entry around this valid supply zone up here. And as you can see, once the supply zone gets tested, it triggers a reversal with a bearish bar. At this point, my cue to enter short was when the price did two things. It dropped below the imbalance zone's 50% equilibrium mark, and it undercut the low of the previous candle. That's why I set my short just above the 650 level. For targeting, the first was hit, but the second one didn't pan out. Nonetheless, I'm not complaining here. The trade still netted me over 40 points. And just as a heads up here, guys, if you are interested in seeing more price action trades like the ones we just discussed, make sure to catch the next video. Alright gang, thanks for watching, and as always, hope to catch you all in the next one.